ladies and gentlemen. Good day and welcome to the Krsnaa Diagnostics Limited Q2 FY26 earnings conference call. As a reminder, all participant lines will be
Ladies
in
and
the listen-only
gentlemen, good
mode,
morning
and
and
there will
welcome
be
to
an
the Australian
opportunity for you
Premium
to ask
Solar
questions
India
after the
Limited
presentation
H1
concludes.
FY26
Should you
conference
need
call
assistance
hosted
during
by
this conference
Confidely
call,
Partner.
please signal
As
an
a reminder,
operator by
all
pressing star,
participants' line
then
will
0
be
on your
in
touchtone phone.
listen-only mode
I now hand the
and there will
conference
be an
over to Mr.
opportunity for
Surya
you to ask
Patra
the
from
questions.
Phillip Capital.
After the
Thank you,
presentation
and over
concludes,
to you, sir.
please note that this conference is being recorded.
Thank you.
Before we
Good morning,
begin,
everyone.
I would like to point out that this
On
conference
behalf
call
of Phillip Capital, welcome
may
you all to
contain
the Q2
forward-looking
FY26
statements
results
about the
conference call
company,
of Krsnaa
which are
Diagnostics
based
Limited.
on the belief,
Joining us
opinion, and
today on the
expectation of the
call
company
are Mr.
as of the date
Rajendra
of this
Gupta,
call. This
Chairman and
statement do
Full-time
not
Director,
guarantee the future
Mr. Yash
performance of
Mutta,
the company, and
Managing Director,
it may involve
Ms.
risks and
Pallavi, Executive
uncertainties
Director,
that are difficult to
Mitesh
predict.
Dave, Group CEO,
I would now like to hand
Mr.
over
Pawan
the
Daga,
floor to Mr.
Chief
Parth from
Financial
Confidely
Officer,
Partner.
and
Thank
Mr.
you, and
Vivek
over
Jain,
to you, Parth.
Head Investor Relations. I would
Thanks,
like to hand
Krishna.
over the line now to
Good
Mr.
morning,
Yash
ladies and
Mutta for the opening
gentlemen.
remarks,
This is
subsequent to
Parth
which
from Confidely
we'll have
Partners.
the Q&A
We
session. Over
represent
to
the
you, sir.
investor relations for Australian Premium
Thank you,
Solar
Mr.
India
Surya.
Limited. On behalf
Good
of
morning,
Confidely
everyone, and
Partners,
thank
I
you for
warmly
joining us.
welcome you all to H1
Today, when I
FY26
look
earnings
at
call
what we built at
of
Krsnaa,
Australian
it feels
Premium Solar
less
India
like a
Limited.
company and more
The
like a
company
mission
will be
taking shape.
represented by
A mission
Mr. Nikunj
to
Patel,
make
who's the Chairman
high-quality
and Executive
diagnostics
Director,
accessible,
and Mr.
affordable,
Kalpesh Vakharia,
and
who's the
reliable
Chief Financial
across
Officer
every
of the
corner of
company.
India.
Now,
Let
I
me
would
start with
like
what
to
really
hand over the
matters.
call to Mr.
Despite being in one of the
Nikunj
most
ji.
capital-intensive
Thanks,
segments
and
of
over to
healthcare,
you,
which is
Nikunj
radiology,
sir.
and despite offering
Thank you
our
very much,
services
dear.
at prices that are 40 to 60% lower than the market rate, or let's say truly pocket-friendly
Good morning,
rates for the
everyone.
patients,
We are
Krsnaa
very
continues to
pleased to
deliver
report
steady
the strong
growth and
performance
healthy
of
margins
this
that
financial
stand
year
shoulder to shoulder
results
with
for
the best
first
in the
half
industry.
of this year.
This
It
in itself
reflects the
is a
strength
huge
of our business
differentiator.
model and also the
There's
growing
honestly
demand for
no
the
one
renewable
quite like
energy
us.
within our country.
Radiology requires
Despite
heavy
we
upfront
had some
investment,
GST
specialized talent,
regulation
and
challenges
deep
for 3
operating
weeks
backbone.
and also the
Most
better
players
monsoon,
don't even venture into it
which
at
makes
scale.
challenges
Yet
in
Krsnaa
execution
has
of the
built and
project.
scaled
We have
one of
come
the
up with the
largest
strong
integrated diagnostics
figures
networks
for this
across India,
this quarter.
spanning
The key
18 states
milestone
and union territories. And
up to
today,
now is we have
based on our
successfully
deployed
commissioned
and
400
under-implementation
megawatt
equipment,
TOPCon line
we operate
within a
the
time
largest
limit
fleet
on
of over
this
200
Lampacham
CT and MRI centers
before
across
2 weeks
India,
ago.
making us
That will
one of
make
the
the total
largest radiology
capacity
service providers
400
in Asia.
megawatt TOPCon and 400
But
megawatt
beyond size and
monopub.
numbers,
So total
what
it will
makes
be
this
800 megawatt
story
facility. The further
meaningful is
400
its
megawatt
impact.
facility will
The
be coming.
scans
We are
and the tests
expecting
performed
to
at our
start
centers
before the
don't just
within the first
produce images, they
quarter of
change
the
and save lives.
next financial year
Because of our
between
reach,
April
even people in the
to
remotest
June.
parts of the country are
The
now getting
overall
access to
in
early
first
diagnosis.
quarter of the next
That means
financial
illnesses
year, our
are being
total
caught sooner,
capacity will be
treatment costs are
800
coming
plus
down,
400,
and the pressure
1.2
on the
gigawatt.
tertiary hospitals is also
If we
reducing.
see the
To put it simply,
growth as per the
Krsnaa today
segments we are
conducts
working on, the
radiology
solar pump
scans
segment
of more than
is
10 million
showing the
patients
continuous
every year,
momentum, and we are
covering a
expecting
significant
35 to
population across
40%
the
revenue
states
from
where
this
we operate.
segment
We are not
for
just
this
present,
financial
we are
year
making a measurable
with the
difference in the
expected
public health
margin.
outcomes. And along the
Currently,
way, a
we
model
have
has also
got
created
approval
employment
from the
opportunities,
10
not only
different
in the
states
metro
from the
cities, but
local
even in the
government
remotest corners
agency.
of the country,
Our
enabling
EPC
skilled healthcare
division
jobs where they were once
also
rare.
growing their C&I segment,
And we have
not
done
only in
this
Gujarat
without
but also in
compromising an
Maharashtra
inch
and
on
Rajasthan,
quality.
and we are expecting
Our operations
15 to
are backed
20%
by
growth from our
India's
EPC
first
division.
36
Our wholesale
NABH accredited
distribution
radiology centers, 57 NABL
also
accredited labs, India's
expanding
first CAP
from
accredited
Gujarat,
pathology lab in a
Rajasthan, and
government
Maharashtra
facility,
to
and India's first
Madhya Pradesh,
ACR
Chhattisgarh,
accreditation for a
Haryana, and
teleradiology
South
hub.
India. We are expecting
No other
50%
diagnostics
revenue
company in
from this
India, public or
division for
private,
this
has
financial
achieved
year.
this combination
As
of
said
scale,
earlier,
access,
overall
and
we are
quality
expecting
within government
75%
partnerships.
plus CAGR
These
for this year
accreditations, supported
and
by our
coming
rigorous
year.
processes,
We are
firmly establishes
advancing our
Krsnaa's position
backward
as India's
integration
leading quality-driven
initiative to
diagnostics
further
company,
maintain
a
our
benchmark in the public
profitability and
healthcare
increase
delivery.
the revenue
Now,
long
despite
term
some
by
of our
adding
PPP
4
contracts
gigawatt solar cell
completing their initial
manufacturing
tenure,
facility.
where one might
First
have
phase will
expected
be
the
1
revenue
gigawatt
slippage We not only bridged this gap,
machinery
but
which
achieved an
requires
impressive
900 to
11% year-on-year
950
growth.
crores capex.
This proves the
Once
resilience
again,
and
thank you very much
self-sustaining
for
strength of our
everyone's time.
business model.
And now I
It
hand
shows
over the
that the
floor
foundation
to
we built continues to
my
compound
colleague Kalpesh
even without
Vakaria
new tender
as a
inflow.
CFO for Australian
On the
Premium
financial
Food.
side, this quarter's
Thank you,
performance
Kalpesh.
speaks to that mission. The
Thank you
Q2
so much,
FY26
ladies and
demonstrated both
gentlemen, for
scale and
attending our
profitability. The
investor
revenue
con call.
stood at
I,
rupees
Kalpesh
2060
Vakharia, would like to
million,
take
up
you
11%
through the financial
year-on-year.
highlights for the
The
first half
EBITDA
of
came in at rupees
FY26.
602 million with a
Our
healthy
total income
29%
stood
margin.
at a
The
brilliant
profit after tax was
302.93
rupees
CR
239
compared
million,
to
translating to a 12%
164.24
margin.
CR in half one
Our EBITDA
FY25,
and
which is a strong
PAT
growth of
growth reflects the
84.5%
maturity
year on
and
year.
consistency of our model.
EBITDA
And as we
increased by
said in the past, we aim
121.9%
to
to
deliver
43.28
sustainable
CR,
improvement in
with
EBITDA
EBITDA margin
margin,
also improving to
profit margins,
14.29%
and the return on
from
capital employed. I'm pleased
11.88%
to
last
say
year,
this quarter's
primarily
number
driven by
shows
higher operating leverage
we are
and
walking the
improved
talk,
product mix.
with ROCs now
PAT
trending towards
grew
15% and
118.7%
continue
to
to strengthen in the quarters
28.60
to
crore,
come.
with PAT margin
Now let's
expanding
talk
by
about where we are headed.
148 basis points
The
to
Rajasthan PPP project,
9.44%.
which is India's largest
Our earning per
diagnostic
share
PPP
also
project,
increased for
is
half one
progressing right on schedule.
FY26 stood at
We are set to
14.90,
operationalize
up
10
from
labs in November,
6.63 in the same
another
period
25
last year.
labs and over 500 collection
On the
centers by
balance sheet
December,
front, the
and the
company
balance
continues to
152
maintain
labs
a
and
healthy financial
1,100 collection
position with a
centers by the end of
debt to equity
Q4.
ratio of just
These will add a
0.05 as
significant
of
layer
September
of growth
2025,
and further reinforce
reflecting our
Krsnaa's
prudent
nationwide
capital
reach.
management and strong
And this is not just
cash
about
generation.
Rajasthan.
The
Several marquee
commissioning of
PPP
our new
projects are under
400 megawatt
implementation,
TOPCon line
and with
during the
these all going live,
October
we
month
expect
marks a
meaningful
key
revenue
capacity
accretion
milestone
from Q4
and is expected to
FY25
further
onwards,
strengthen
and a
our
full year
top line
contribution in
and margin performance
FY27,
in the coming
which will
quarters.
further strengthen our
We
growth
fully
momentum.
remain committed to
Behind
maintaining
all
strong
of this,
financial
there's a strong
discipline
team
while
of over
supporting our
350
next phase of
radiologists
growth,
and
including
120
the
plus
upcoming
pathologists who
solar cell
trust our
manufacturing
systems,
project.
technology, and
Thank you so
processes.
much for
Their
listening to me,
association with
and you
Krsnaa
can now
reflects the
just bring out your
confidence we have in
questions,
our
whatever you
quality and
have to
reporting
us. Thank
standards.
you so much.
No other diagnostics company in India has a doctor network of this scale, and this base continues to grow. It further strengthens our
Participants who would like
leadership
to
and
ask the
depth in
questions
clinical
may raise their
excellence.
hands.
So when we talk about Krsnaa, it's just not about the financials or centers. It's about an ecosystem that blends scale, trust, and technology to make diagnostics
Mr.
truly accessible.
Raman, please unmute
It's this very
yourself and
ecosystem
introduce
that has made
yourself.
the government's vision of delivering quality
Hello, sir. Can
diagnostics
you hear
through
me?
PPP model a successful
Yes.
reality.
So,
And Krsnaa
hi,
has
sir.
been
I'm
at the
Raman
heart of
from
this
Sequent
execution.
Investment. I have
To
a
summarize,
few
this
questions with
quarter
respect
is
to
a
the company.
reflection of
What's
who
your
we are
current order
becoming,
book?
a company that invests deeply,
Raman,
serves
as we
affordably,
said earlier
delivers
as well, we are
profitably,
working in a
generates
three
employment,
segment. One
and
is our
grows
pump segment,
responsibly.
where we have a
We are
fixed
proud of
order
what we've
for
achieved, but
next
we are even more
2 to
excited
4
about
months.
what lies ahead.
In
Thank you for believing in our journey and
distribution,
for being a part of Krsnaa's
we have a
mission to make diagnostics accessible to every
66
Indian. One
distributor,
scan, one
but
test,
we
one life
take
at a
every
time.
month order.
With this,
Because
I now hand it
there is
over to Mr.
always a
Mitesh
fluctuation of
to take
15
you
to
to further
20
updates. Thank you.
paisa in
Hi, good morning, everyone.
per watt
Mitesh Dave
in
this side,
the
Group CEO, Krsnaa Diagnostics
pricing.
Limited.
And for
A
our
very warm
retail,
welcome to all.
we get everyday
Today,
one.
I'm really pleased
So
to share
for solar
that
pump,
Q2 FY26 has been a
our
milestone
order
quarter
book
for
is
Krsnaa Diagnostics, which is
300
mainly driven by strong execution,
310 crores at the moment.
disciplined cost management, and commitment
Okay,
towards
which
the
will be
operational
executed
excellence.
over the next 4 months, if
Our
my
EBITDA,
understanding is right.
602
4 to
million,
6 months.
growing at
Okay.
18% year-on-year,
And
And
then
sir,
other division
and
is
taking our margins to
we just do
29%.
as it comes.
okay.
This is a clear reflection
So,
of
I
our
just want to
structural
understand the
efficiency,
capacity.
which we
You
continue to
said you
unlock
have
across our
the
network.
old capacity of 400
Over the
monopoke
past
and
year,
now 400
we have
TOPCon.
undertaken
But I think
a focused
when
set of
we
initiatives
by
that
the
are now clearly
end of
reflected in
Q1,
our
we
improved
already had
profitability
600
and
megawatt
stronger operational
capacity, right?
leverage.
Yes, yes.
And
We
upon
have
that,
enhanced manpower planning
you
Yes,
added
across our
400
network,
more in October,
ensuring
yes,
which takes
each
the
yes,
center
capacity
delivering
to
higher
1
productivity
gigawatt.
and greater
yes.
patient throughput,
In month
while
of
maintaining
March,
strong quality
when
and
we had a
service standards
600, we had
at
a
the top.
400
At the same
monopark and
time,
200
we have sharpened
megawatt
radiology
poly
utilization
capacity.
further,
Okay.
mainly into
So
the
the poly
advanced modalities,
capacity now
and resulting in superior asset efficiency and a meaningful
we
uplift
just
in both revenue and
sold
margins.
means those machinery.
Our
So
supply
now we
chain
have
has been
400
strengthened further,
megawatt monopark
which
and
is
400
enabling us to
megawatt
move faster with a
TOPCon
greater
facility
precision,
because for
reducing installation
poly
timelines,
panels there is not
minimizing
in a
downtime,
demand
and accelerating accelerating
overall.
commissioning of new facilities. and all this contributing to faster scale-up and improved
Yes, Raman.
capital return.
And how much did you sold this
Our
200
continued
megawatt of
investment
poly
in
capacity?
technology-led automation
No,
is
it's
streamlining
just
core workflows
disassemble and
from reporting and billing to
dismantle and
centralized
so
monitoring
because
and turnaround
always
time.
30-40%
These efforts are
of the
enhancing patient
machinery we can
experience,
utilize in
taking our
existing
NPS to the significantly higher
facility,
number
but like
while
only
driving sustainable
the
and scalable
tabor
operational
machine
efficiency across
which
the business.
we cannot use. So
A
usually
key
we have to
competitive strength for
dismantle and
Krsnaa
sell
is
it to
people
the
first capability building.
the weight
We are
metal
investing
price.
significantly in
So
training and
you got
upskilling our
revenue in front
workforce
of that,
from
right? If my
frontline to
understanding
the
is right. So
technician
I'm
to the
just asking how
phlebotomist,
much did you
radiologist,
dismantle
operational team,
it
lab
and
technicians,
sold
and
the
so on and so
Yeah.
forth.
non-usable?
Today we have
That will be,
one of the largest
as
and
I
fastest
said,
growing
it's at
pool of
metal
skilled and
price, means
semi-skilled
at
professionals
scrap
in
price,
the diagnostic
but I
space,
can check and
delivering
let
their
you know.
best,
It won't be much,
operating seamlessly
Okay.
maybe
and across
less
metros
than
and deep rural
50
clusters.
lakhs.
These initiatives
Okay,
enables us to
understood,
do
sir.
more with the
And so
existing
I just want to
infrastructure,
understand, we operate
delivering
in
better
3
outcomes
divisions,
for
pump
both
segment,
patients and our
distribution and
beloved
retail.
shareholders.
In pump segment, we just do
Krsnaa stands
EPC,
out
right?
as one of the most
We
future-ready
don't
platforms,
manufacture
uniquely
pumps and all
positioned
that stuff.
to outpace
No.
industry growth by
Because
expanding
in
access
pump,
to our unpenetrated
pump
markets,
segment,
bolstering brand equity,
50% cost
capturing
is
a
from solar panel,
substantially larger share in the retail
10%
opportunity.
cost is from the
The results
pump,
are already
and the
visible on the ground.
10% cost
We are
from
witnessing
the
robust growth not just in the patient volumes, but
mounting
also in
systems
recurring
like
customer behavior.
metal,
A
and the
reflection of rising patient
10% is
satisfaction,
soft cost
strong
like
unit economics,
installation,
and operational agility
transportation,
backed by
10 to
efficiency,
15%, 10
with which we
10
are
to
able to deliver a
15%,
consistent
including
service
sales
experience
commission and
nationwide.
everything, and
Our
remaining is the
retail
margin.
expansion journey, in
So
particular,
overall,
is
the
advancing
pump
at a remarkable pace,
manufacturing can give only
demonstrating the power of our
contribute
brand
up
and
to
trust we are
10%.
continually building with the patients.
Yeah, I
In the
understood
second
that, but
quarter
I just
But
want to
we are
of
not
understand.
this
doing that.
financial year,
We are not doing
revenue
that.
of our
Yeah, I just want to
direct-to-consumer business has
understand.
surged by impressive 60%
Out of
Q-on-Q
this segment, you do
quarter-on-quarter growth.
mounting and installation, right?
Retail has contributed
No, we do the
approximately
panel
8%
supply
of
as
our
well.
revenues in the first half of the
Panel
year,
supply, mounting, and
and this
installation.
contribution is
Yes,
steadily
and that
compounding each
project
quarter
comes
as both reach
as a
and brand
tender to
preferences
us.
are increasing.
So the pump
Given the
only
growth
we purchase
trajectory
from the partners.
we see
So
today
this
and
has a
expect retail to account for 8 to
gross margin,
10%
segment
revenue
has a gross
in
margin
the
of around,
FY26
let's say,
to
60 to
accelerate
70%.
to the tune and contributing
How
15 to
come?
20% in the coming financial
Because you
year.
are supplying solar
A shift
panels
that will
as well
not
as you are
only
doing
enhance market
mounting and
positioning but also
installation as
deliver
well
strong
as you are
margins,
doing the project execution part.
accelerations, and the
Yeah,
improved
so if
profitability.
we, it's
Our
not
scale-up
60
has
to
been fast, smart,
70%.
and
The
deeply impactful.
gross, the
In just
margin
1 year,
we are
we
expecting
have
the from
expanded to
pump
more
division
than
is 12 to 15%.
2,800 touch points across the
That's
country, a
So
testament to the
12
strength
to
of our
15%
asset-light,
margin because the panel
partnership-driven strategy. We
have
are
a
strengthening
cost,
our
the
retail
mounting
business
have a
in
cost,
regions where we trust
the installation have a cost,
and
the
what the
transportation
patient
have
and
a
the other
cost.
doctors
So
and the other
there's,
shareholders
and
are
this is a
there.
service business.
Towards
In
brand
service
recall
business,
are
the margin
deep-rooted,
is always
including the
50%
Maharashtra, Punjab, Assam, and Odisha.
Understood.
with product
Our
with service.
strategy here is crystal clear.
And so my
Be
last
present
question is
where
with
patient
respect to
needs
your
us the most
retail
and
division. In
elevate the
retail, we are
ease
selling
which they
solar
can
water
access
pumps
high-quality
and I
diagnosis.
think solar grid
We are
inverters,
scaling home collection
if I'm right.
services at pace,
In
widening
retail,
our
we sell
preventive
the
and
solar
wellness
panel
offerings,
and the grid
and building
inverter,
strong
not the
partnerships with the
solar
local
and
healthcare
solar water
ecosystem,
pump
allowing us
for
to
the
seamlessly integrate into the daily
Kusum
healthcare
projects.
decisions
But
Okay.
of
that's
a large
we
and
can
diverse
when we
community.
say pump division,
Now,
the
as we
solar
advance
pump we
into our next
consider
phase of
as
accelerated
a
growth,
pump division.
we remain fully
In the
committed
retail
to profitable
division, grid
scale.
inverter and
Our
solar
strategy
panel.
revolves around
And
deepening our
kit,
leadership in integrated
like
diagnostics,
in kit there is
continuously improving operational
mounting
efficiency
systems
and
and
margin
also some
profile, driving sustained and
electrical kit as
diversified
well.
growth across both
So
retail as well as
yeah, my
PPP,
question is with respect to
and ultimately
this
building one of the
solar
India's
grid
most admired
inverter.
healthcare brands,
Are we manufacturing
powered
it
by technology,
in-house
reach,
or are
relentless
we
execution.
outsourcing the
With that,
manufacturing of
would like to
the
hand it
solar
over to
grid
the Mr.
inverter?
Pawan,
And
We
Chief
out
Financial Officer, Krsnaa Diagnostics
for
Limited,
now we
to take us
outsource.
through the
and
financial
yeah,
highlights
is
for
there
the
any
quarter.
plan
Thank you.
for starting a
Yeah,
in-house manufacturing?
Thank you, Mr. Mitesh.
it is in
Good morning,
a
everyone.
in a planning.
Let me take a moment
Okay,
to
thank you, sir.
briefly walk you
Yes,
through
thank you.
our financial performance for the quarter.
Thank you, Raman.
Revenue for Q2
Before we
FY26
proceed
stood
further,
at
Nikunjji,
rupees
there's one question
206
in the
crores,
chat.
reflecting a robust
It's from
year-on-year
Krunal
growth
Patel.
of
So his question
11%,
is, what can be
driven
combined
by
revenue of
sustained momentum
1
in both
gigawatt solar
our radiology and pathology
module
segments.
and 1 gigawatt solar cell
Our
after
focus
December
on cost leadership
2026
and
when we
operational
commence that
excellence
cell
has
manufacturing
translated
in Q4
directly to our
FY27?
profitability.
No, the
EBITDA
cell
grew by
manufacturing takes
impressive
18 to
18%
20
year-on-year
months just to
to
start.
60 crores.
So it will up
This
and
performance
running
resulted
on
in
a
221
27
basis
after
point
June
expansion in
27.
our EBITDA
But 1
margin,
gigawatt solar
which
panel,
now
we can
stands at
expect
29%.
1200 to
Profit after
14,
tax increased by
1200
22%
crores turnover
year-on-year
from the solar
to
panel manufacturing
24 crores
and
with a
remaining
margin of
from the
12%.
projects.
This
Say like when
demonstrates
we
our
do
continuous
the
ability
EPC,
to not
that
only grow the
segment
top
always
line,
give
but
3
also
times more
deliver
than the
the bottom line.
or at least double
Earning
turnover
per
than
share
the solar
of
panel.
rupees
When we do pump,
7.25
it's
for
2.5
Q2
times.
FY26,
So overall,
up
once
from
we
rupees
as a APS have
5.9
a
in the same
1
quarter
gigawatt
last year,
facility and
making
up
a
and running
24%
at
year-on-year
full 12
growth.
months, we can expect above
On the working capital front,
1500 to
our
1800
receivable
crores
currently
turnover.
stands around 150 days, which we aim to bring down to around 100 days by year-end. The current positions reflect a temporary timing impact largely arising from the implementation of a new central government payment guideline,
Yes, you are.
under which states are aligning their processes and releasing payment through RBI link accounts.
Thank you very much.
With this, we conclude our opening remarks. Would now like to open the floor for question and answer session. Thank you.
Because
Thank you very much.
every time you
We
are
will now
doing
begin with the
surprises
question and
without
answer
raising the
session.
debit. That is a
Anyone
key
who
point
wishes
that
to
I am
ask a question
liking
may
very,
press
very, very
star
much
and one on their touchtone
regarding your
telephone.
management
If
qualities.
you wish to remove
So even
yourself
after
from the
doing
question
so much
queue,
of
you may press
capex,
star
still our
and two.
debit levels are
Participants are
very, very
requested
low,
to use
almost nil, I
handsets
think.
while asking a question.
Yes,
So
that's
first
what
of
Ladies
all,
and
we like
on,
to hear.
gentlemen, we will wait for a moment
on
while
this
the
front,
question queue
I
assembles.
wish to congratulate you, sir, and your
Thank you
team.
very much. Yes.
The first
Sir,
question
I
is
wish
from the
to
line
ask
of
you a couple of
Bara
questions. First
Murli
question is
Krishna
regarding
from
our
Oman
capex
Investment
and everything.
Advisors. Please go
Yes.
ahead.
So you are having a very, very, very excellent vision. So very good, very short period of time, you will become the one of the manufacturers in TOPCon solar cells. Okay, sir. But as an investor, our company, in our company, what I am feeling that let us we are little bit lag in going for capex. That I am feeling why, because when compared with our other peers, they're already
good morning, Mr. Bala.
started
So if I
the solar
understood your
cell
question,
manufacturing
you were
plants,
asking
and they are
question
likely to
about
commission in
the Maharashtra and Rajasthan
in this
status and about
financial
the
year or
pipeline.
the next financial year, in the mid
So
of the next
Maharashtra, we have
financial
the
year, most of
MRIs
the
which are under
companies.
implementation.
So I think
Almost 15 MRIs are under
somewhere we
implementation. 10
are
have already in
little bit
the
late
completion
on
stage,
this
and they
front.
are yet to be
That is my
inaugurated
first
by
question.
the
Second
respective
question, sir.
authorities. With regards to
Yes.
Rajasthan, as we said, we
So
are in the process of
you are
establishing
correct.
around
We
10 labs
initially had options
soon,
to
and the balance
operate the
25
solar cell
labs and
facility in
500
other states
centers
than
will be done
Gujarat,
by December, and the
but
rest
we
to
as a
Q4.
management
With regards
decided
to
to
pipeline,
stay in
there are
Gujarat and
in
especially
pipeline,
near our
but
facility.
like we mentioned in the
And
past,
we
due to
have
the competitive
find out
nature of
some
these
land
tenders, we will be
almost 3 to
disclosing the
4
details
months
as and when
ago,
we come
and
close
our
to the
water application
concluding of the process
approvals
of
is in
the
a
tendering
process.
different stages.
So
I
until
hope that answers the
because
question.
in solar cell manufacturing, the key things is the water approvals from the government, and as soon as we get that, everything else is line up and tied up, including the banking, including the key management staff, including the technical partners overseas. But until the government approval doesn't come, we have to wait.
Yes.
And we don't want to start in other states because most of our staff are in Gujarat, and we are, of course, we have a good management team, and we can do so much
Sorry, so
within
the tendering process basically
little
is not in our hands.
capacity
There are
or
tenders
little
which are currently
capital,
at different
but
stages of
we
execution.
don't want to.
There are different
For
moments
now,
when the tenders get published and
we
when they get
think it's
executed. So
better
as of now, as I speak, there are
work
some
in
tenders in the
Gujarat
pipeline. As and
or
when they
from
come, we'll
Gujarat.
disclose.
Okay, sir.
It's not that
Sir,
their center pipeline has,
another question is
kind of
that, sir,
reduced. It's still there. It does
so
exist. In fact, there are
many solar
discussions at different
companies
states, different,
are planning for go
authorities.
for renewable
As and when
energy.
they come, we'll certainly share the updates.
They're going for hydrogen business and everything.
Yes.
So, like that, of course, it is a very, very initial stage, I think, even though whether you are planning for it in the near future, anything like that, for green hydrogen.
So you are correct. The hydrogen is still not, worldwide. Still, it's not mature technology, but definitely the battery energy storage. We have our eyes on it. The battery energy storage is getting matured. If we talk about
can we please
in
request you
Australia,
to repeat the question? Your voice
say
is
like
not very
from
clear to
last
us.
2 quarters, I am working in Australian solar industry since last 15 years, and the solar battery means battery systems already started getting mature in Australia. So I am expecting within 2 years, not maybe within 2 years, earlier, I am expecting some good movement will start happening or already happen in India as well.
So whether we are going to have some interest on that front also, sir?
Yes, please. We are looking into it.
Oh, that's great.
Hi, good morning. Mitesh this
And
side.
finally, sir,
Well,
as we are seeing the
taking
results,
what the question that you have asked,
year-on-year
is the
numbers are
query
very,
around.
very excellent.
One is,
But
yes,
from last
this year
2
we
quarters,
are hopeful to getting
quarter-on-quarter
it
numbers
closed at an 8
slightly
to
modest.
10% of the overall revenue contribution and taking it to the 15 to
Hope, I
20%
think,
in the coming financial year.
recent
That's correct, and that's where
capex
the
commissioning
entire
of
ecosystem is working around.
model
And
manufacturing of 400
secondly, what you
megawatt.
mentioned is also correct. Yes,
That
we are going to be a
that might
unique,
increase the
positioned
QOQ numbers also in the upcoming.
ecosystem
Can I
in the
expect that,
retail
sir?
space along with the PPP, where we'll have
Yes, you
a
can.
shared
And
infrastructure to drive the
if
better
we are already
margins and sharing the
utilizing our
cost.
facility at
OpEx
maximum
going to
level
be lower in the
in
coming
last
times.
quarter, previous
However, for
quarter.
now, it is
So
very
last
important
quarter we
as an
haven't had
RPL,
room to
where we
increase
are
our,
looking to
production
building the
capacity.
brand initiatives,
And
how to be more
also
accessible to the needy ones,
little bit
building
GST
higher
change
operational
government
efficiencies,
announced on
and
4th.
how to
So
build AI
between 4th
capabilities
to
for our
22nd,
overall ecosystem
everybody
for the
was
better
hesitant
outputs.
to
So in
take the
that
panels
sense,
because the
initially
GST
it may be a little
reduced
slower, but however, it's going to be very robust. And as and when
almost
we are scaling the newer heights and building our percentage
10,
contribution to the
reduce
overall
up to
revenue,
5%.
it will come down
And the
further.
other thing was because of the monsoon, some projects order was already there, but they couldn't pick up the stock because of they couldn't execute some projects, But still, overall, with help of different segment and we have a
So 4-5 years,
diversification
we are looking to have
in
a close
different
to
segments,
40 to
we
50% of
achieve the
contribution
same number as
coming
the
out
last
from the
quarter.
retail straight.
And we
Then what?
definitely in solar industry for
Sorry to interrupt, sir, but I
specifically
request you to
retail
join the
and
queue for the
pump,
follow-up
we
questions
always
as
say
there are more participants
from
left.
October,
Thank you.
November, December,
The next
January,
question is from the
February, and
line of
March is like
Lokesh
solar month
Manik from Vallum
in India.
Capital. Please go ahead.
The good weather, good demand.
Good morning to the team.
By April, many
Yes, my
people
first
have
question was, we've seen a patient
they
growth
want
of
to
4%
finish their
YOY,
projects.
but
Either it's a
drop in
government
test
project
volumes
or
of
either it's a
4%.
C&I projects.
So
So
what is
always
driving
we
this divergence?
in last
Ideally,
we are working in India since
as well, but
2013.
we've seen an
So that's
increase.
what
So
my 10
what
years
is driving
experience
this
say. Always
divergence?
last 6 months, always perform
Lokesh, could you
better
please
than the
repeat the
first
last
6
part
months.
of, I
And
couldn't
the
hear you
good
very
thing
well.
is we now got the
Yeah,
capacity
sorry. Am I
expansion
audible now? Is it
at
better?
right time as well. So
Yeah, this is much
definitely,
better.
as you are expecting,
Okay.
I am
I was saying
expecting
that we are seeing
good
patient
numbers
growth
as
of 4%, but we are seeing the test
Excellent,
volume
sir.
drop by
Excellent.
4%. So
Thanks.
there is
Thanks
a
for
divergence
the
here. What is
opportunity. For,
causing this
thank you,
divergence?
sir.
You welcome, Kalyan.
Thank you, sir.
See, Lokesh, if you see the diagnostic business is something, which
Just
is
a quick
dependent
reminder
on the
to
needs of the
everyone,
patient.
if you have any
So
questions,
these test
please
volumes,
raise your hand
the patient
using the
volumes are all
reaction
dependent,
tab.
and therefore they go in different directions at different point in time. So there's really nothing that I could comment. What I would suggest is, if you see the
Mr.
overall
Archit
directionally we are growing,
Agarwal,
and we do
please
whatever it
introduce
means in terms
yourself
of creating
and
patient
speak.
awareness, more tests to come through. And this is how we see the business. Yeah, Mitesh, you also want to add something?
Yes,
taking up your input, we have also started pouring in wellness care, where the RPTs, what you are talking about, will going to have further surge in the coming times.
Margin profile for pump,
Okay. And
which is
Mitesh, in this,
12 to 15%.
in
So
the
what is the
retail
margin
business,
for other segments?
out of 17 crores,
For
what would
wholesale,
be
we are
the
expecting
proportion
10
for
to
preventive and
11%. For
wellness? How much
retail,
would
we are
that have
expecting
contributed
15 to
to
18%.
wellness, to the retail business?
Yeah, it's too early to have any bifurcation
what
of the
is your
wellness as well as
current
the
capacity?
illness area.
You have
However,
added
it's going,
400
that's where our
megawatt
focus is now
online.
shifting, and in the
So
coming times, we'll be able to
it
give you
is
the way crisper
already commenced,
bifurcation
or
if need be.
Yeah,
Right.
it's already
My thought is
commenced.
on,
So this month we
diagnostic
are
industry
expecting
as a whole.
30%
First half
output.
sees
The
good
next month we are
results, and then
expecting
second half is,
60, 60 to
flattish to subdued. Do you
50 to
expect a similar
60%,
trend for
and
yourself
month
as well
after we
going
are
forward in
expecting
Q3 and
full
Q4
capacity because we need
on the
some
top
ramp
line
up
growth?
time.
Yeah. So
okay.
Lokesh,
And
this is
this
something an industry-wide trend.
next phase of
Typically, if you
400
see because
megawatt,
of
it will be
whether
commenced
it's the
from
winter, the
Q1
cold, there
FY27,
are
right?
dips
Yes,
in the revenues, and then
yes.
Q4 onwards it starts
Okay.
kicking in.
And 1 gigawatt
So that though the
solar
trend is there, we
cell,
of course try to see how we can maximize
when
the
it
revenues
will be
and continue
commenced?
on the profitability or the growth engine.
From
But the
the
trend
date of
does
approval, it will
impact
take
across the
18
industry.
months.
Okay. And the radio centers will be
Okay.
operationalized by when? What is
And
the timeline?
the
So
cap,
we are
When will you reach
expecting
200 radio
by June
centers?
27.
okay. And the
For
capex
now.
of
So
900 to
by
950
December
crores
end is
you
what
have
we're expecting
mentioned.
the radio centers to be
So
operationalized.
you will take the
Okay.
date,
Okay.
or
Got it. That's
how
it
it
from
will
my side.
be?
Thank you so much.
Thank you.
Thank
So
you.
we are
The
expecting
next question
to
is from the
invest
line of Anshul Agarwal from Emkay
30%
Global.
in
Please
a
go ahead.
business, and 70% will
Hi, thank you
come
for the
by
opportunity. Hope
debt.
I'm audible.
Yes,
Okay.
Yes, for sure, audible.
Okay. That's all from my side.
Thank you. Few questions. First, the CGHS benefit that has been
Mr.
conferred
Neeraj
to
Joshi,
hospitals,
please
does that
introduce
apply
yourself.
to us? And if yes, if you could just
Joseph,
quantify the
sorry.
benefit that could flow in.
Ankush, the CGHS, if you see, is more for empaneled hospitals. Since we are through a tendering process and the rates are as per the tender, we don't
Maybe
see an impact or
Mr.
benefit coming
Joseph
to us.
is
Though there are
on mute.
discussions going on, but as of now, I don't see any
Yes.
benefit coming to us immediately on this.
Yes, sir. Sir, congratulations on the good set of
Yeah.
numbers.
Second question on retail. So any insights on how we have been able to ramp up
Neeraj,
this
I
retail portfolio so fast?
couldn't
Is it
hear
our
you
value
properly.
proposition? What is it that is working for us so
Yes.
well in retail?
Yes, sir. So I don't have a question, so only a suggestion.
Yeah, well, so hi, good morning, Mitesh this side. So retail, unlike
Yes,
the
please.
traditional approach or
Yeah,
unlike
and
the
that is
absolute
that
modern approach, when we started pouring into the retail
very
space, we
good
were
that
very
we are
clear
venturing
while
into
we
solar
have to
cells
stick
and
to our
battery
roots,
energy
the
storage.
traditional approach that
But
everyone takes up and builds up.
as somebody
But
has
parallelly, we'll
pointed
also
out earlier,
have an blend of the
our
modern approach,
competitors
which
have
is
already
going to be more
started
accessible, AI-driven,
the
more
capex on this.
patient-friendly,
So I
and the
think we
multiple
should
value proposition for the
maybe
patient.
work on
So
this
we got
as
a
fast as
very
possible.
strong blend of both of
Only a
this with
suggestion.
the existing
No
infrastructure
questions.
that has been
Yes,
to
yes,
the
you are
truly
correct,
quality
and
standard all
we
across
are
the nation.
also our
And then the
top management
overall
also
field force that
working
we
closely
carry
with
throughout the
government.
length and breadth of the India.
And the good thing is we
Strategic
already have our
initiatives that we took
contracts
are really
done
helping us because
for
we are
long-term
going with the
contract done for the
specific
local
models,
solar
which is
cell
like asset light or
availability with
partnering with the
Jupiter,
clients,
and
or
also
to
for
an extent where
TOPCon solar
the
cell.
overall value
We already
proposition,
getting regular
which is
supply
kind
from
of
the
a gap
local
that we
market
identified when we
because
started
of
it.
our experience in the industry and our
Thanks,
relationship
Nitesh. My
with
question would be around
different
B2C business
companies.
in retail.
But
There,
in
I don't think we'll be
meantime,
partnering
we are
with
also eagerly
any
wants
of
to start
the
solar cell
technician
for
slash
now as
doctor
soon as
network.
possible.
Would be driving this
Okay,
through
sir.
our workforce itself. Would that be
Thank
correct?
you.
It's a blend of both, right? Wherein,
Mr. Achyut
as I
Prabhat,
said,
you
it's
can
not going to be a
speak
single line
next.
approach ever because we want to cover a 360-degree space. And in that, sticking to the older routes with the existing infrastructure, existing premises, existing processing units, adding up to the layer of the modern way of driving the business, which is more patient-friendly, more accessible,
Mr.
and
Prabhat
offers
is
a
on
value
mute.
proposition.
Hello, am I
So
audible now?
we will not try
Yes.
to give away any of the piece for building our retail, and wherein we'll have a holistic approach to build it the way it can, and it
Hello?
should be even more faster.
Yes, Ajit.
Okay. And is our retail business now
Yes.
margin accretive? Is it not loss making anymore, that has contributed to the margins for the overall business?
Yes.
Sir, you are audible. You can speak.
Not really. As I said, we are still not at break-even for the retail. However, in the coming end of the year or coming times around 100 CR or so, we are looking to have a break-even and then driving the robust bottom line from there on.
Is it true or?
Okay.
See,
Ex of retail, if I carve out retail revenues from our overall revenues, our B2G business does not seem to have
overall
seen much
energy
growth.
demand before
Is
20
this due
years,
to
it was
any
400
contract sort of
gigawatt active power
expiring in the
station
current quarter,
requirement.
or
And
any
currently,
indications
India is
around why our
also on
B2G
400
business does not
gigawatt active power
continue to see
requirement.
the uptick
So,
that it used to see?
before 20 years, China was there, and currently
So,
China is
Lokesh, on the
sitting on
B2G side,
2,800
there has been
gigawatt
no
active power
major
requirement
contracts that have gone.
for
There
the
are some
energy.
smaller
That means
drops,
within a
but in spite of
20
the drops, we
years,
continue to
our
have the growth
overall
momentum,
energy
and which we
consumption
believe will continue even
for
in the
India
subsequent
will
quarters
go
to come
up.
through.
Even if we don't touch at China, still we
Got it.
have
Just one
5
last
times
question, if I
more
may.
energy
Our
than
tele
where we are
radiology
at the
center.
moment.
To rejoin
So
the
every
queue.
year
Sure.
and
I'll do that. Thank you.
year in,
Thank you.
year out, our
The next
energy
question is from the line of Dipali
requirement
Bansal
will
from Ventura
grow up.
Enterprises.
The
Please go ahead.
current
Good morning,
setup,
everyone.
government
My
of
first question
India
is,
is
would you
looking
be
for
able to give the
500
mix
gigawatt for
between
renewable
how the
energy.
revenue was
Out of
divided
that,
between
300
mature,
gigawatt from
semi-mature,
solar.
and newly
That
launched
means 40 to 50
centers
gigawatt
between radio and PAC?
solar renewable energy
Dipali,
we are
Vivek Jain would be able to
expecting
provide
every
you this
year
detail offline.
from now onwards. From recent
All right,
report for the
sir.
solar
So as we
panel,
have seen that
including
we have
the
rapidly
recent
increased the number of
capacity
radio
expansion,
and PAC
that's
centers,
120
what would
to
you suggest?
130 gigawatt
When can we see
solar panel
like
available,
major uptake?
manufacturers
Because we
available
see that
in
there's
industry,
almost 1
including
year,
some
1.5
monopack
year
facility,
gestation
and
period
some
for all
maybe
the
have a poly
centers.
as well.
When
Very
are we
little, but
expecting
some.
that period to,
So the
let's
overall
say, end for
energy
most of our
requirement will,
centers,
and also this is a
newly
nameplate
launched?
capacity. So the
Dipali, if you
actual
see this
production
model, there's a
from the
continuous
so whatever the
investment on one
nameplate
side, a ramp up
capacity,
on the other
the actual
side,
production
and
is
then
usually 70
retail
to
also going up.
75%.
So, from a
So
timeline or a
of course,
quarter-on-quarter
India
performance
have
perspective, you
20
see,
to
I wouldn't be
30
able to pinpoint that, there'll be an uptick immediately.
there will be
Directionally, yes,
20
things
to
are progressing well, and
30%
what have we been saying in the past in terms of top line,
additional
bottom line,
capacity,
that I
but
see that
each and every
continuing
month there is
to
not
maintain
a
this momentum even in the
symmetrical demand.
subsequent quarters.
Like 6 to
Now,
9
from a
months,
uptick
India
perspective,
need,
yes,
say like
FY
it's not
27
if we
onwards,
need a
because with
50,
Rajasthan coming in, you
48
might expect that
gigawatt
uptick to happen.
requirement every
But I think
year.
directionally, we
It's
continue
not
to
like
have
4
that growth
gigawatt
momentum even
requirement
in the
coming
subsequent
every
quarters.
year, every month. Some month
All
it comes
right.
6
Would you be
gigawatt,
able to
some month
provide
it
some
comes
guidance
3
for,
gigawatt.
let's say,
So
next
the
year or 2
companies
years
who
down the line?
doesn't have a
What kind of
diversified
revenue are we
portfolio,
targeting from all
of
the
course they
expansion we
may
have
have few months
completed?
or
And we
few
are going to
quarters
open a lot of centers
not
from,
good performance,
let's say,
and few
Rajasthan and
quarters will be
Maharashtra by
good
the end of
performance.
quarter
But
4.
the company
So
like
can you provide
APS,
some
who
guidance?
have the diversified portfolio,
Well, I would wish to, but
they
just
can
to give
maintain
you
each and every
a
quarter
very broad
in
level
and
guidance,
out
we look at
at least
expect around 5
what
teams.
they need.
Sorry? How much?
Okay, thank you. Like,
We are looking at
I
higher
mean,
teams,
are the
and further
margins
details,
sustainable
we'll ask
in the
Vivek
near
to share any
future?
more additional, granular details,
Margin, of
please.
course, there will be, there
All
should
right.
be some
Thank you, sir.
pressure on the margin for
Thank you,
upcoming
Dipali.
years,
Thank you.
but it will be
I
adjusted
request
by
each
the
participant to ask 2
top line
questions only.
revenue. And
The
as long
next
as we
question
are
is from the line
entering
of
in the
Anand
vertical
Kulkarni from
integration,
Front Wave
the
Research.
margin will
Please go
also
ahead.
will be increased also.
Hi, thank you for the
So for
opportunity.
next, I believe from now up to 5 years, Indian renewable energy margin will be sustainable.
The past quarter, we have seen
Yeah, thank you.
with
That
the
answers the
installations
question.
and realization
Yes,
of the
thank you.
houses. So my question over there is,
Anand, your voice is not very clear to us. Could you please speak closer to the mic?
Nikunj, we can,
am I audible now?
in the Q&A section, there are a couple of
Hello?
questions. So one is from Nayan
Hello?
Gupta.
Yes, yes.
Am I
His
audible?
question is, what are your views
Yes.
on
So as I was saying,
overcapacity concerns
we
in
can see a
indigenous
uptick in the
solar module?
borrowings, and in the
Please
past quarter,
discuss
we have
that
seen
demand versus
many
supply
updates
in coming
filed
years
that
in
we are meeting
Indian solar
institutional
sectors, and
investors
what
and
would be
analysts
the
and
effect
everything.
of government
So
policies
any
coming in
timeline,
June
if you can share what is
2026?
also along with the quantum that we are trying to raise the
From the
funds,
June
if you
20,
can
like
throw
see,
some color on
there is
that.
already ALMM requirement now.
So, if you see the borrowings
From
largely
the
are mostly
June
on the, overall
2026,
working capital, we've been able to maintain
it
a
is
tight
not
control
going
on
to
the borrowing.
change so much
As a company
because
philosophy, our approach has
still
always
there
been
will
to
be C&I
leverage
segment and
or
some
these
personal
borrowings to the
project
minimum
will
wherever it
be
is more
the
efficient from
solar
a
cell
usage
will
of
be
capital.
keep importing.
Having said that,
Because currently
even for
also
further
the
expansion,
rooftop
for whether
projects
it is
are under
Rajasthan or other PP
ALMC.
projects, as I mentioned in the past,
Pump
we always look at what is
projects
the
are
most
under
optimum or efficient
ALMC,
use of capital, whether
and
it is, let's
only
say,
the bigger
borrowing,
projects, which
raising
is
debt, or a
from
combination of debt and
the
equity.
say like
So we
Coal
continue with
India
that approach
and the
even for the
NTPC.
further
Those
projects.
projects
In
will
terms
come
of
under
just to give you a headline
ALMC
of
from
capex, I think as and when we
2026
see more
onwards, which
clarity with the
APS
Rajasthan, we might
is not
come back
doing
with
at all
further
up
updates
to
on the
now.
debt side.
So
But as of now, we try to
for
maintain the
us,
debt
there will be not
within the
many
limits, reasonable
changes,
limits, and
but
ensure that
overall
the
market,
impact on the
yes,
financial
there is a
statements
good demand
are
of
to the
local
minimum.
solar cell in upcoming years. We don't have any exact numbers, how many manufacturers are
So we
planning.
are not
There are
looking for
many
any
people saying they are
expansion on the
planning,
terms of
but how
equity.
many will be executed within next
No, not
12
as
to
of now.
24 months? That will
Okay,
be
thank you.
very important. But the
Thank you.
overall,
The
if
next
we have
question is from
80
the line of
to
Aditya
90
Chheda
gigawatt
from InCred Asset
capacity
Management.
of
Please
solar
go ahead.
cell, we do have a ability where
Good
everybody
morning.
can make a good
For
margin
H1, the
as
volume growth
what business
is
needs.
flat at roughly
But currently we
32
have only
million.
20
Can you
gigawatt
explain us the drivers
running
of
capacity
volume
as
growth
per
for
the
H1
recent
and drivers for price growth, which is to the
2025
tune of roughly
running is
12.5% for
15,
H1?
but then
And your
few are
outlook on
coming.
the same,
So
what would
25
drive
gigawatt
volume
is
or price growth
what
going forward?
some reports say.
That is my first question.
Yeah. So Aditi, in terms of volume growth drivers, like Mitesh also mentioned, across the board, whether it is
We have
PPP or
Mr.
retail,
Sandeep
there are different strategies
to
that
ask
we
the
have
question
deployed.
right
Some of them
now.
are bearing fruit in terms of even identifying certain wellness packages even in the PPP space, and at the same time creating some awareness about
Sir, you are
advanced tests that we had in our test menu, which we are now also offering. More granular details, Vivek will provide to you, in terms of the numbers separately offline.
Yes.
Will you be able to maintain your
Got it.
margins
And you highlighted that we are expecting
similar
the
to last year,
receivables
or
to
will
come
these
down to
margins
closer
rise? That's the
to
first question.
100 days. That would imply a roughly working capital release of roughly
We
100
will
crores.
maintain, and we
That
are
should
pushing
help
for
you
the
to
little bit
sort of
better
fund the
performance
Rajasthan
than the
capex. Is that
last
what
year.
you have in mind? And this is
Sir, can you
in
be more
context of the
specific
higher
with the
borrowing
numbers?
that you have for H1 as of now.
Correct. So as I said, the Rajasthan
So
the
I will
receivables that
pass
we
it to our
expect to collect
CFO. Maybe he
in the
will
coming
be
weeks or
right
months, it
person.
will
But
certainly
overall,
help
I am
us
expecting a better year than
but we
last
are also
year.
exploring if there
Kalpesh
are
would like to
debt
say
as a
add
combination,
something.
because
Hi
as you see,
Sandeep,
we
how are
also
you?
have ongoing various
I'm
PPP
fine. I'm an
projects. There
investor
are
in
some
your
PPP
company,
projects in
and
the pipeline.
I look
So
forward to
whatever
grow
is the
with
best
you.
optimum
Yeah,
way of looking at
absolutely,
capital,
absolutely. We
whether it is
also would
internal
like,
accruals or
everybody
raising
grows
maybe
with our
some debt,
company.
we
So
are
I
evaluating
would
the
like to
situation,
answer your
and
this
we continue
question
to
about the
monitor this
margins
on a
going
daily
forward.
basis to ensure
So
that
right now, as
there is
Nikunj bhai
efficient
said,
use of
that pump
capital
we have got margin of
overall.
about 13 to 15%.
Right. And
Wholesale has got about 10 to
sure, that's it.
11%. And retail has got about 15
Thank
to
you.
18%. And this
The
margin
next
has
question
sustained
is
in the
from the
last
line
3
of
quarters.
Daljit
And
Singh
going
from
forward
Nova
also
Asset
in the next
Manager.
3 to
Please
4
go ahead.
quarters, we expect the same amount of margin.
Hi,
Probably
can you hear
wholesale
me?
can go down a little bit because of the
Yes.
competition.
Yes, we can hear
Probably
you.
say from right now it is
Yeah, so my
10.50,
question is
10.75 right
regarding the
now. So it can
receivables
go down
part.
to 10% max,
We
but
have
not more
had
than
some
that.
legacy
In pump, we
receivables
continue to
from
maintain the margin
Punjab
because the
and
order book that we have got the
What is
margin,
the
in the
status
next
of
6
that?
months that we are going to
And
get.
I see this time
And for
almost
the
80
retail,
crores increase in
will definitely have
receivables.
good
So
margins because retail and
is it
CNI
any
have got
more
good
the
margin
state
of
has
about
gone
15 to
into that
18%, which we continue
process
to
or what
sustain
happened?
for the next 3 to 4 quarters.
Yeah. So Daljit, if you see the receivables, yes,
Can
it's
I
been a
continue with my
situation
second
which has
question?
not
Yes, please.
we've seen in the last so many years. And
Considering
even
that
if you see historically,
there's a
Touchwood
lot
till
of
date, we've
new
maintained
capacity
zero
coming
bad
up,
debt.
whether it's
So, from
Waaree,
that perspective and our
nearly every
experience,
player is
this
expanding.
receivables is more of a timing
So,
issue for now. Even if you see
what is
subsequently,
your
we've collected almost more
company's
than 50 crores. So things are
future
looking
strategy?
better now with the
Would
SNS
you be
first
dependent
systems
more on
getting,
tenders,
the
or
teething issues
would your
getting
strategy
normalized.
be more
We
focused
do expect
towards
some of these hiccups to
actual
continue, but
users
we
and your
expect
pump
to come
business?
over 100 days in the coming
Good
quarters, and
question,
maintain
Sandeep.
that
Nikunj
past
here.
trends from
See,
next
India,
year onwards.
as I
But these are, as I said,
said,
system
as a
transition
India, we
happening
have
across
40 to
different
50
governments, so there are
gigawatt
some
every year
teething problems
requirements.
impacting
So
these collection of the receivables.
30%
But
requirement
way we
comes from
collected
the
our money,
residential,
I see this is a
C&I
positive
and
sign,
pump
and
segment.
also what we hear from
Another
different quarters of the
70%
authority.
means 35 gigawatt comes from
So
the
the reason I was asking
ground
is
mounting
that this
projects. So as a
situation of floods,
APS,
etc., in
from this
Punjab,
quarter,
Himachal,
we
in
have
that area.
started
So has
recruiting the
that
salespeople
impacted
who can
any
go
collection
and
efficiency?
speak to the project developer.
Yes, it's
Because
certainly. I mean,
until
not
now
only
our
from
capacity was
the fund
always
flow, but also operationally
occupied
there have been
for the
challenges with
remaining
authorities,
35% of the market
handling
share,
the
like
disaster
residential,
issues, and
C&I, and
therefore
a
they
pump
were
project.
not there to
And it is
authorize
always
certain
easy
payments.
to get
That was one of the
50
issues certainly,
megawatt
but I think
orders
as I said, overall,
and do your turnover.
we see
But
that
it
this
is
improving in the
always
coming
hard to
quarters.
do 50 kilowatt, 100
Thank you very
kilowatt
much. Thank you.
projects.
Thank you.
And we have done that
The next
very
question is from the
nicely.
line
And
of
I must say,
Rano D from
I must
MES
congratulate
Capital.
our team
Please
for
go
that.
ahead.
And that ability, again,
thank you for the
we are
opportunity.
working in
My
very
question was
limited states.
regarding there are
Example for
projections that
residential,
by
we are just
2030
doing
we will
in
have
Gujarat,
300 million senior
Rajasthan,
citizens living in
and
India.
Maharashtra.
Now,
But that we can
one of the
expand
top
to so many
competitors,
states in
they
coming
have already
periods
started signing
very
contracts
easily
with.
because we have a good exposure working in this. Earlier, we
Hello,
were just
Ranodip, we
working
can't hear
in
you.
Gujarat. We have added the
I'll
Rajasthan,
repeat my
and then we
question.
have added the
The
Maharashtra.
projections are
So
that
that we
by
can, that
2030 there
division
will be
itself can
300
grow
million
for next
senior
3 to
citizens
5
living in
years
India.
easily.
One
Which
of our top
for
competitors,
other
listed company, has
manufacturers,
already
it's
started
they,
signing
if
with
they want to
multiple
come in this
senior living
segment,
communities.
it takes
What
easily
is the
2
school
to
of
3
thought
years or
at
4
Krsnaa's
years. But
management
for
end in
APS
terms of
to
targeting
grow
this
in the ground mounting projects
Yeah,
supply,
Ranodip, so
it may
what you
take
see,
two good
is more on
salespeople,
the private
and then
side
that's
where
it. Because
I would
we
say
are
they are
in
tying up with these
manufacturing
elderly
since
care
last
homes.
12
But if you
years.
see in our business,
We people
most of
know us
the senior
as a
citizens
brand.
across our
We have
PPP
so
come to
many
our
solar
centers
panels installed
because
in
that's the only
country
access that they
since
have,
last
especially
12 years, and
considering
they are
the
up
free
and running
diagnosis
as
scheme
well.
or the
Just only difference
prices
will be
which are very
they
pocket
were
friendly.
100 kilowatt
So from we see this
job,
momentum
and
even
this
in our
is going to be
existing cycling volumes, where
1
we see senior
megawatt.
citizens coming up and
So
availing us
we
services.
have
Having said that, even from the
66%
retail
market
side,
share
the kind of
is
what
open for
value
us
proposition
to
Mitesh
expand.
mentioned we are offering is much
And
more, I would say,
for us,
lucrative
to
from a
keep
senior
the
citizen's
1.2
perspective,
gigawatt
and we are also able to
capacity
leverage this. So
busy,
going forward, of course,
I
we are also
don't
watching
feel
this
that
space,
challenging
but I
at
think
all
we are already
in
much
even
ahead in
coming
terms of
period.
our reach, our capabilities,
Because
and
we are one of
these
the
elderly care
pioneer
centers,
solar
though they
panel
are concentrated
manufacturer in
only in the
India.
metros, whereas we are
And
serving
we don't
populations
have,
across the states,
like,
across districts,
we don't
across
want
towns.
for
That
now,
puts us
like
in a very
within 3
different
months or
league
6
compared
months,
to
we don't
whatever is
want like
happening.
5 gigawatt or 10 gigawatt.
Sure, sure.
That's a very
My
good
second
strategy. So
question is in the
basically, you're
other
saying your
extreme end
focus
of
is
this
going to be
cohort, which is the Gen Zs.
your
Now,
own end
Gen Zs
consumption in
have a
residential
growing
heat pumps.
affinity
Is
now
my
for wellness
understanding
and
correct?
health checkups, but they want
And
things
we
on the
will
move.
grow in
So, is
ground
there a
mounting
school of thought
supply
at
now.
Krsnaa's management to
Now,
explore
so
D2C product
if we
initiatives
see
that can
overall
help
portfolio,
users track
because
their
until
vitals?
now we had 400
Just
megawatt
for a global
capacity. So
reference point of view,
400
there's a company called
megawatt will
Cardiac Sense,
easily consumed
which kind of
by
launched wearables,
residential
which medical
supply
grade wearables for monitoring multiple
and the
vital signs.
pump. So
Is
even we are
that something
adding
in the roadmap
400. So
of Krsnaa?
even we do up to 600
Yeah.
megawatt for our
So
in-house
just to add further on the
projects
previous
for
question, one
solar
more point I
pump
want to add. See, even if you see from the government's
distribution
perspective, the
and the
Ayushman Bharat and senior citizen insurance
residential. Still,
that the
we
government is
only
doing.
may
So
require
a lot of these
400 to
government patients come
600
to our centers as
megawatt
well, and
capacity, and which we
therefore
still
this
have
is
a 6
another
months
area of
to grow that
improving traction
division,
that we
and
see.
that
Coming to the question
holds
of Gen Z, yes,
66% of
at
India
Krsnaa,
market.
even we are watching the space. Like Mitesh
Can
also
I
mentioned
continue with my
earlier,
questions,
there
or
are
should I hand
various
over to somebody
initiatives we are
else?
undertaking,
No,
including technology-led
you
solutions,
can.
AI-layered solutions,
Can you give me a
some of
breakdown
the unique,
on what kind of
test menu that we are
percentage is
curating, targeting to these
pumped, how
kind of
much is
audiences and the patients.
ground
But
installation,
to
how
be
much
honest
is
with you, while
residential? What kind of
you hear a lot of this buzz
what kind
around
of
it,
breakdown do
if you
we
see,
have?
still there's a significant
So,
population of
In terms of
patients
the
who are not being
turnover or
served,
in
and
terms
that is
of
where
the
Krsnaa sweet spot is.
profit
We are also
percentage?
parallelly taking various
Both.
initiatives which
Okay. In
eventually will
terms of the
converge and will be
turnover
allow us to
until
leverage
this
both
first
the kind
6
of
months,
audiences, whether it is the existing base as
I
well as the
pass
new
it to
age
Kalpesh because he
Gen
has the
Z population
exact
that you're
figure, so
talking
you
about.
can
But
get
to
the
be
correct
honest with you, we are
information.
not going to be fully
yes, Sandeep, this is
aggressive on it.
Kalpesh here
It's a
again.
kind of a very
So in
calculated
pump,
approach
we had got a
in
turnover of
targeting those audiences.
102 crore, 0.89 lakhs
Sure. Thank
in
you,
April to
and all the
September
best for the
quarter.
next quarters.
In wholesale, that is our
Thank you.
distribution side, we have got a
The
turnover
next
of about
question is from the line
165
of
CR,
Ayush
And
Chaturvedi
retail,
from
our
Arihant
EPC
Capital.
business,
Please go
retail
ahead.
rooftop, residential rooftop, and CNI has a turnover of about 34
Good morning,
crores.
gentlemen.
With a margin,
Thank you for the
as I said
opportunity.
earlier,
Most of my
that pump
questions
had
have
given a
already
margin of
been
about
answered.
15%, which is a profit of about 15.5 CR.
Just would like to
And
understand
wholesale
for the sake of
distribution
curiosity,
department has got
as
a
we
margin of
you know
10.25%,
had
which has got a profit of
significant disruptions in the
16.99
state
CR,
of
about
Punjab
17
and
CR,
Himachal due to
And
floods.
retail has
Did
got
we
a
also
margin of
encounter
17%,
any sort
which
of
is about
impact on
5
our
and
revenues and to
75,
what extent?
5.75 CR.
So yes, operationally there was certainly impact, like some of our centers were also affected. But this also gave us an opportunity to help the patients in need, and that is where Krsnaa has always been in times of difficulties, in times of these natural calamities where Krsnaa centers are present, where none of the other players were present. Krsnaa was able to create this impact in the lives of people.
Going forward.
See, when say like state like Gujarat, even we support all our distributor in other state as well. But state like Gujarat, our marketing, we have in-house marketing team. But they say like if we are starting in a new state, say like in MP, then we support our distributor. We have in-house marketing team. He support our distributor business to do the marketing for his business and our business together. So the
and they're going to see a very big expansion in the asset base as well.
So the channels where so the states where we have strongly established, where we basically spend in marketing based on the revenue per state.
Segment ramping up.
So this state,
so on the
if we are doing
side,
that much revenue,
in terms of the operating leverage, the question that you asked about, if you see, we started this journey just about a couple of months ago. And the results have been promising. Now, from an operational leverage perspective, whilst we are leveraging our existing labs or kitchens, like what Mitesh mentioned earlier, there is also certain expenses in terms of putting up these retail outlets or the touch points, the manpower that we have to deploy for sample collection. So those are the initial costs which are currently impacting the bottom line. But as the volumes grow, as the numbers grow, we see this convergence happening where eventually, like Mitesh also mentioned, the break-evens will happen in the coming quarters. Now with Rajasthan kicking in, our approach has been, we've been studying Rajasthan closely as well, considering it a big project.
Because
we're also trying to ensure that the impact on the financial statement should be minimum. There would be a moment of where of course we have to deploy manpower and the equipment which is typical for any PPP project. But our honest effort is to ensure that on a quarter-on-quarter basis the impact will be to the minimum. That is what is our honest effort or endeavor that we're trying to achieve. So of course as the deployment happens, time will tell in the coming quarters. But this is what our
some people go and visit and collect the documents from the customer as well.
Thank you.
So they do both. They support the sales and they do support the actual service as well.
Is from the line of Mayur
to all the divisions, like pump division, wholesale division, and the retail division. So basically for sales, we need one good call center and we can expand the sales for residential. For the installation, all the installation happen by the contractors. So we have identified contractors, we give them a training, we also check their installation randomly. Initially 5 installation, we must check, we approve them. After that, every randomly 1 out of 10 installation get checked by our team as well.
So I have 3 suggestions. Strategy is okay, but you need to be more proactive. For example, when I look on the social media, I find your presence is hardly there.
So, just couple of, maybe small error, just accounting thing. In the geographical spread of Western, Eastern, I think the total tallies to 107% instead of 100%. So, maybe we can just clarify which, is the numbers where it stands. So, if you can just look into that.
I don't see you there. So, may I suggest
no, Mayur, I think that's an error. Thanks for pointing out. But I'll ask Vivek to reach out to you.
Yes.
And
thank you very much.
On the question side, actually, outside of what you mentioned that the fact of receivables, we will come down to 100 days. What I wanted to understand is impact on it of that on the revenue side if it continues, because we have been in a position to reduce the volume where the receivables continue to be higher. So is that continuing, and is that also one of the reasons why the growth on the B2G side remains lower in the region of 2% only?
To increase, our system needs to increase, but our staff need to increase. But until now, our capacity was 400 megawatts.
Yes, so we are also monitoring the situation and selection.
big orders
the
from
temporary
even in
suspension that we
Gujarat.
do is
Say
not
like somebody comes and
significant.
gives
Some of these are
15
mostly seasonal
megawatt order last
because of
quarter.
also
We
the
couldn't
rains and whatever.
execute those orders
But I don't
because
think so. We
400
expect
megawatt
significant
we have
drop in the
already
revenues
our
in the coming
regular
quarter.
orders.
It all
Maybe
depends on
now
how the collection proceeds, and we'll, of
can
course,
start
we take certain
5
decisions
megawatt,
in
10
terms of
not
suspensions. As
even
and
more
when they
than
happen,
15
I'll be
megawatts
able to
order
give
in
you
a
better
month.
clarity. But as
Still
of now, I don't see
we may
significant
go up to 5, 10 or
impact in the
15
coming
megawatts
quarters.
because we have already existing
Okay.
business and channels
Just
available.
two more questions
And
from the
marketing we do
efficiency
step by
side.
step, but it is
In
very
the
good
past, you had
suggestion.
mentioned that
Maybe
our arrangement
to
for
expand in
capital
Facebook, it is
efficiency
not
in terms
very
of
costly. And
taking the
also in
equipments on lease and
Instagram and LinkedIn. So I will
it's
put
been
some
some time. So
additional
can you
pressure
add
on
some color on
our
how is
team,
it? How's the
and we will
experience
make that
going?
achieve.
Are we in a position to
But as
scale
our
that arrangement and
YouTube is a very
our
good
understanding
channel.
on that?
Today
And
Zoom
will
is
it
looking at
when
YouTube.
does it actually
And I
start to
suggest
show up
also
efficiency on
working
the
with
capex side,
influencers.
if
The
anything?
fact
That is the
I
first.
know your presence.
And
I mean, you have a
secondly,
very
on the
limited
retail B2C side,
manufacture and your
I
receipt.
think our earlier
And your
expectation was
you
that
don't have much to
as
sell.
we
But the
scale up,
point is
the
that
benefit of
social marketing is
retail
actually seeding.
on the
The
margins
results
as
you
well as
get
on
in
the
2 years, 3
working
years,
capital
you
would have
must have a
flown
very
in
strong
much
presence,
earlier
regardless.
than 100
You
crores which
must have a
you just
spend on social
mentioned.
media and
So is there a
take it up
change in
with
some
take it
strategy?
from me.
Have we
It
gone
really
are we
pays.
going a little more aggressive in terms of, or
We
are we
already
seeing more
experienced well
costs which
in
have got
say like
added
Gujarat,
compared to our
because
past?
Gujarat we
So what
have
has
very
changed in that
good
strategy?
so
Because
many installers
earlier we were
in our
expecting some of those benefits to
database,
start
so we
much
can install
earlier, and
1.5 2
the
megawatt
impact on
every
profitability would
month,
have been
and
much
we have
better.
been
So these two
influencers since
questions
last
on that side,
8 to
and
12
thank
months
you so much.
in
Yeah.
Gujarat.
So
Also
maybe
some
on the first
YouTube
question,
advertisement and
with
Facebook
regards to the
advertisement,
different
and
models of
we, as
equipment
you
purchase,
said,
like
we are getting so
the
many
deferred payment or
inquiries.
leases, those models have already
More
been
inquiries
implemented. We are, they are already
as
reflecting
per
in the
our
financial
target.
statement.
So similar
So yes,
things
we
we
do
can
get capex
easily
equipment on
now
deferred or on
start
lease.
in Maharashtra and
On the lease
Gujarat
side, there is an
and
impact of
Rajasthan,
GST, and
but
therefore we have
for
not
that
pursued
we need
the
internal
deferred payment basis
strength
that we are doing for larger
within a
equipments like
say
CPC
like
and MRIs, where
production
the vendors have
capacity.
given us
We were
different
limited
lines
by
of credit.
production
Now,
capacity
coming
by
to the
now.
question
But
of
now
retail on the
with
margin front, from a strategy,
YouTube
nothing has
and
changed.
Facebook, the good
But
thing is
when
it's
we
by
realized
postcode
initial
wise
successes,
or by
we thought it
state
is better
wise.
to scale up
So until
by
now we were strong
deploying
in
more
Gujarat. I'm not
manpower,
sure
by
which
deploying
state
or these
you are
additional
in,
centers. And
but
therefore, if you see, I could have
if
chosen a
maybe
path
you are
where
in Bombay,
the
then
revenues are
maybe
higher
within
in a
3 to
small
6
region. But we
months
see this
you will
momentum, and we
start
thought of
looking some
catching up, and therefore
presence
we are
in
also
that state as well.
concurrently
And
expanding.
if you are in Rajasthan,
Nitin,
maybe you already
want to add
start
something more to this?
looking
So while having said
APS
that the
there.
initial
But
encouragement
currently,
through the not just the
this
numbers but
3
even
will
with the
be our
patient
strategic
responses
and
and their
MP we
trust
are adding on.
from the
So this
clinicians
4
as
will
well
be our
has
strategic
given us further
states for
encouragement to
next
go
3
out and
to
figure out the
next 3 to
firstly the
6
gaps
months.
which
Then
all are
we will
there,
add some
and
more
secondly
states,
how to fill those gaps. Still there are so many gaps exist in the
Very good
overall
strategy.
diagnostic space when it
Can I
comes to the
continue
right
with
to
my question, or
healthcare
would you
for
like me to go
everyone
Thank you
back to
so
the
much,
queue?
at a most
sir.
affordable pricing and
We
the
now move
qualitative
forward with
diagnosis.
the Q&A
That's
section.
where then
But
we
it is
have
nice
started
speaking
getting
with
onto
you,
the
Sandeep,
more brand building exercise,
Mr.
how to be
Kapoor.
more accessible,
We will
and
be
to
in
build
touch.
onto the AI
And
areas where in one of the previous
can you
sessions
please
where
pass our
Gen Zs
email
are looking
address?
on
So
the
if
go, as
one
well
has
as
a
the
more
elderly care
question,
needs
we
more
can
attention,
always
and how
discuss
can we more
because
friendly and convenience
it's
to them.
always good to
So we have
discuss with
started adding all
like-minded
those
people.
layers to our entire ecosystem in the retail
I will
space,
put my
and
question at
hence
the end
we
of
are
the
now
queue.
what we are saying
I have
around
so
1
many
lakh crores.
questions.
But it's going to be
Thank you.
certainly in a soon, and that will further add up to our bottom line in a very
Nitin ji,
robust way,
next
rather.
question is from Nimit Mehta in the
Right.
Q&A box. So
Okay, fine.
his
I'll
is,
come back in the queue for next. I
can
wish you all
you
the
please
best and
explain
good
the
set of
working of
stable
Kusum
numbers. Thank
scheme?
you.
How is the
Thank you so
tendering
much.
going
Thanks.
on?
Thank you.
What are current
The
and
next question
expected
is from the line
tenders
of
and in
Manoj
which
Dua from
states?
Geometric.
Second
Please
is
go ahead.
your market share in solar pumps, given that a lot of new
Am
customers are getting aggressive,
Yes,
what
sir.
do they think? What will be happening to the pricing?
Congratulations, sir, on something great with Krsnaa is
Okay.
now being
In solar pump,
positioned now.
it's by
So,
tender
was my
and
understanding
it's by
right that you have given a
qualification
guidance
criteria.
that retail
So
can
until
be
now,
40 to 50%
solar pump
of the sale in
tenders
next 5 years?
hardly 15, 20
Yes,
or
yes.
maximum
That's what
30
we are also
Okay.
players
anticipating.
can be qualified for a
Great.
solar
That's super.
pump tenders. And
Even
they
assuming
usually they
Krsnaa
need
from
like
after
1,000,
Rajasthan contract,
2,000,
1100 to
5,000,
1200
10,000
crore
solar
sale
pump
can
experience.
go
So
to 2000 or
maybe the
1500 to
new
2000
players,
crore sale
it's
next in
not
5 years
very
in
easy entry for
B2G
solar
and
pump
B2B.
segment.
So we
I'm
are
not sure
targeting, assuming retail to
which
be
particular
600 to
segment
1000 crore sale. Is my understanding right?
Nimit is trying to say.
Yeah,
But
see, as I said, that's always an
current
aspiration to have
government solar pump
aspiration, I understand, but
segment
it is something which I
is
have heard.
restricted by
yes,
experience
it is,
and it's
And
by
that
tender.
aspiration.
So once the
Okay.
tender and most of the
So
tender, all
just
of the
because retail is
tenders are
growing fast, can we
already
get the
allocated
number
and
of the
it
last
comes with
month?
fixed
It is 18
profitability.
crore for the quarter, I think. What
In
would have been last
the other
month number?
question for the Kusum
I think
scheme,
I'll ask Vivek
there
to
are
share
a
those details with
Kusum
you
A, Kusum
separately.
B, and
And
Kusum
when can we
C.
reach to
So
100
one of
crore,
the
maybe
Kusum
25
C is
crore
like
quarter run
pump,
rate?
then
Just
Kusum
to
A
get
is
the 100
like
crore
a
run rate.
PPA agreement, and
It is just,
Kusum.
a small number because
So there
it is
are
growing very
various
fast. So,
Kusum
Yeah,
Yojana
I think quarter four is where we see the exit run rate in those numbers.
within PM Kusum
great,
scheme.
great.
So we need to know
I think
which
this is
particular
something
PM
very
Kusum
great,
scheme
and
he
best of
wants
luck.
to know more.
Thank you
If
so
for
much.
ground mounting
Thank you.
PM
The next
Kusum
question from the line
scheme,
of Lokesh
APS
Manik
is
from
currently
Vallum
not
Capital.
very
Please
much
go ahead.
active. For residential
Hi,
rooftop,
thank you again for the
yes, we
opportunity.
are. And
Just
for
two
a solar
clarifications
pump,
here.
yes, we are.
The interest expense
So
has
10
increased.
states
So is
currently,
there any
we got the
approval
local
gaps out
agency
there due
already
to
approved us
liability?
for the work, and many of the states
Hi,
we
Lokesh,
already
Pawan
got
this
work
side. This is
allocation
mainly because
done,
of
and
the
some
working
states
capital
we are
which we have
expecting
utilized in the
within
quarter. This is
coming
correct.
periods.
So, this is an impact of a finance cost.
Okay. And a clarification
So
on the
next
CGHS part.
question from
Yash,
the
you mentioned we are
Q&A
not
is
directly
from
beneficiaries since we are tendering and we are not
Tejas
empaneled.
Khandelwal.
You know, the hospitals who are
So
empaneled, I
his
guess,
is,
is what
what is your
benefit.
take on the realization
Is
of
that
solar
understanding right?
modules going
So,
forward?
or do
So
when our
this is because some
contracts
competitors
mature, then we
experienced
get the
4 to
benefit?
5%
How
drop
is that?
in the
So,
realization on a
yeah, Lokesh,
quarter-on-quarter
if you see
basis.
currently the way the
Second is,
notifications come out, it
what
talks
is
more
the
for
capacity
empaneled hospitals,
utilization
which
we
are
will be looking
which were
for
not
financial
empaneled, or
year
those were empaneled but not serving
2027?
because they always said the rates were low. So for these
Financial year
hospitals, the
2027.
notification is what
See,
we understand was
capacity
issued. We are in
utilization
talks with
again
various
depend,
authorities.
say
This
like
might impact the
APS have
upcoming
a
tenders where
13-year
the new
experience,
CGHS rates could be
and
used as a
we are
benchmark.
expecting to
But
run
for the existing,
1.2
because these are
gigawatt
contracted
capacity
rates,
at the end
I
of
don't see an
13,
impact or
14
benefit
years.
coming to us.
You know, by
But at the same time, we
again
are
after
currently
6
discussing.
months.
So if there
So
is
for
anything
us,
which
we
comes to
don't
yours,
feel
which has
the
an upside, we'll
challenging.
certainly share
But
this with
if
you
the
all.
solar panel manufacturer
Okay, but
who
do
are
you continue to get
limited by
the increase
segment,
due to
like who are just doing ground
WPI in
mounting,
your
or
current contracts?
who are just doing
So there
the
are rate
say
escalations
like
which are contracted,
distribution
which are embedded
only,
in our contracts.
then
Wherever those are, we certainly get them.
definitely they have to
Great,
recheck
great. That's it from my side. Thank
before
you.
expanding their
Sure. Thank you,
capacity.
Lokesh.
In terms
Thank you.
of the
The next
in
question is
terms
from
of
the
the
line of
realization in a
Surya
profit,
Patra from
as
Phillip
long as
Capital.
we
Please go
can,
ahead.
we are able,
Yeah.
say, to
So
utilize
few
60-70%
clarifications from my
of
side.
our capacity.
See, in fact, this
We
quarter
are
we are
expecting
seeing
similar
a kind of
profit
a sequential as well as
from
YOY
profit
improvement on
margin from the
the revenue
business,
per test.
because we are
So is it driven
diversified
by,
solar
let's
panel
say,
manufacturer. We
product
have the
mix,
solar panel
possibly higher
supply also,
radiology or
solar pump in
incremental
our
contribution what
portfolio,
we are seeing from
and
the RPL?
retail
Is that a
direct
factor and
retail and
hence
C&I projects in our
more or less
portfolio as
sustainable
well.
or increasing further? How should we think
Now,
about
one
it?
last question. This is from +91
Yes.
Asset
So
Management.
Surya, as we said, we had
So,
also started focusing
you are
on
moving
if we could
from
leverage
modules into
these
solar cell
high-price tests.
manufacturing.
There
What
are,
strategic
also depending on the
edge will
patient
you
needs.
have in this backward
So we
integration
have been able
given
to generate some
government
benefit out
PLI
of it.
support and
We
intense
expect
Chinese
this,
competition?
we are aspiration is to continue this in the coming quarters, where
See,
more patient awareness amongst the doctors that Krsnaa
China
offers
is in
these
solar cell
high-price, high-value
manufacturing
tests as
since
well.
last
Even on the
15,
retail
20
side, like
years.
Mitesh mentioned, the team is
We
doing a lot
are
of
protected by the
canvassing around these
government
kind of
policy.
tests, whether it is illness or wellness.
So,
So we are monitoring, and
and
we hope we will
government
be able to
policy
leverage this in the
is
coming quarters
already
as well.
there from 2026. We
Okay.
need DCR
Regards the
cell, and
RPL,
maybe
so
after 6 months or 12
we
months,
have certainly seen a kind of a
it's
almost
again,
5x
it's too
jump
early
in
to
the
say,
touch points.
but maybe
So,
they will further
could you
strengthen
share,
the
sir, what is the kind
requirement
of a
for
franchisee
imported
mix
solar
within
cell
that, and
within
how much is
in a
the
country as well. So
own
we are no,
touch points
we
that we
don't
would be
need to
having,
see
or what is the
how we
thought
can
process
compete
around the
China,
franchisee aspect
because
here?
it's like somebody is
So,
studying in PhD and
Hitesh
somebody is
mentioned
in year
earlier,
10,
we
and we
are
are trying
kind
to
of pushing
compete
the pedals on all the different
between
levers, whether it
those
is
two
franchisee,
students.
leveraging the plebos,
It's
or the KRC
little
model
bit
that we
bigger
have
to
curated.
here,
So
but
these are
this is a
different
truth.
areas of touch
When we
points that
see
we're
the
integrating,
Chinese company, and the growth of the Chinese company and government support and
about
industry
these different
support,
aspects, which are
it's
there are some
at a
franchisees, there are
different rate.
some
But
we even have
good
some of the
thing
focus
is
centers,
we
but
have
we
our
certainly
own
share
policy, we
more
have our
often in
own
GT.
demand, we have our
Sure.
own market,
And
and we as a APS,
about the phlebotomist fleet also,
by entering in
if you
solar
can,
cell,
what is the thought
currently
process
we are
number I can
seeing the
possibly get
margin.
it later from Vivek?
So
But,
much
what is the thought
margin
process
we
here,
are
whether we will be building
losing
phlebotomists separately for
by
the
we are
retail
paying to solar cell
venture?
manufacturers. But the good
Yes,
thing
yes.
is we have a
So
long-term
we
good
are
supply,
currently, we have
so
levels
we
from
can
on
at
the
least
PPP
getting
side.
a
We're
continuous
trying to
supply.
see wherever we could
But
leverage, but in areas
if
where
there
our
will be
PPP
enough
network is not there,
capacity
we'll have
in
to
coming
deploy
period,
these phlebos.
there are
So
two
currently
types
we
of
are
solar
looking at both
cell
these bodies and
manufacturers
trying to
also
ensure that
coming.
these
Some
phlebos,
who already have
the
a solar
incremental
panel
cost, which is also
facility,
impacting
some
the
who doesn't
margins
have a solar
as we
panel
are expanding.
manufacturing,
Hopefully in the
and
next
they
year,
are
as they
just
start
coming with a
contributing more
fresh
revenues will be there.
breakground
So we are
in
also,
solar
we
cell
will certainly have to add more
manufacturing.
phlebos as we go along, but
Some
we are
are
trying to
already
balance it out in
contacting
terms of
us
revenue
for the
accretion and
long-term
impact on
contract
the
with
margin.
them because they don't have a solar panel.
I'll ask
They are
more
coming
granular
with
details
solar
about the
cell.
numbers.
So
Yeah.
in
Any
that
important
case,
PPP contract in the pipeline,
the
that is one. And
companies
secondly,
who will
do you
have
find any
right
incremental
amount of
competition for the
capacity
PPP
in both
tenders,
for solar cell
given the kind of
and
GST
solar
cut as well
panel,
as the
they will
CGHS
have a
price rise?
sustainable margin long term.
So
Example,
yes,
if
there are
APS
some
needs
contracts
2
in the pipeline, and
gigawatt
hopefully we'll be able to announce the
solar
results
panel,
soon.
and
We're also
APS
awaiting
we have a
certain
3
outcomes.
gigawatt
The
solar
competition
cell.
intensity
That called
continues to
right.
increase. People are
And
also
if we
looking PPP
consume
as a model.
70-80%
But as I said, Krsnaa continues to
of
maintain its
a solar
leadership
panel
position because of her deep experience and
within
expertise.
our business,
So
and
we welcome competition.
70-80%
Yes, there have been
of solar
certain
cell
challenges along with it,
for
but I
our
don't see
business
significant
and
impact. Of course, we as
little
the
bit
time comes
supply
and we
to other
participate,
company,
we try to
then
monitor
those
this as we
company
go
will
along.
be always
Okay,
sustainable.
just last point, sir.
But if somebody
So
have
what is the
15
capex
gigawatt
that we have
capacity, and if their
working with for the
utilization
current
will
year?
go,
And out
say
of that,
like a
what portion of the
5
capex
gigawatt
would
or
be
6
through the
gigawatt,
vendor
they
finance?
will start losing money.
Yeah, I think I'll ask
So,
Pawan.
hi, Surya, Pawan this side. So this year,
I hope
apart from
it
Rajasthan, we have planned
clears
a
the
capex of
answer
150 to
of the
170 crore. Out
question.
of
But
that,
if there is a further
we already
questions,
incurred
anyone have,
80 crores
please
of capex,
pass our
which is
email
50
address,
already in
and we will
capitalized
address
and
each
30
and
in
every
WIP.
question.
So this is
Thank you, sir. That was the
basis
last
for
question. Now I
radiology
would like
equipment which we
Nikunji
have
and
capitalized.
Kalpeshji to
So
move
as
forward
the
with the
Maharashtra
closing
MRI
remarks.
center will be getting inaugurated in
Once again, I
maybe
can
in
see more
Q3,
than 56
or these assets have been procured on a deferred payment,
party
where we initially paid only 20,
for
25%
earning
in
calls.
overall,
I'm
not only the
very, very
equipment,
happy
apart from the
to
infra and the
see
other
all of
small
them, and
ancillaries equipment.
thank you very much
So this is an
for
outflow. This
time you have
entirely has not
spent,
been paid.
and all
Balance
the
is still lying
questions
in the books,
you
which
have
is payable as in
asked
capital
to
credit.
us. Sorry, due to time limit,
Okay.
we couldn't
Just
answer
one more
each and every
point,
question.
see,
But
with
you
regards
can
to
take
Rajasthan,
our email
I just
address
wanted to
from
check
Confidently
in this
Partners,
current quarter
and
whether
please
any
send
cost
us an
number
email,
is
and we
already
will
been
answer
factored
each
in
and
our
every
quarterly
question
financials.
within a timeline.
No,
Thank
Rajasthan
you
has
very
no
much.
impact on the current quarter financials, neither on the cost or on the revenue side. Nothing. It will all happen from Q3.
Thank you.
onwards.
Sure, sir. Yeah. Thank you. Thanks a lot, sir, for all this, for answering all these queries. And there are no more further questions here. So, thanking you for the entire team of